Hello, everybody, and welcome to the second episode of Quarterly Learnings presented by the Quarter Life Investor. My name is Andrew Pate. We have here to the side, underneath the northern lights, Ryan Rand, and we have below us, just overlooking Lake Travis, now outside of Austin, Texas, Justin Holder. And welcome to the second episode. We've got a great episode for you today. But to kick everything off, let's go ahead and start with our newest and first segment that we've ever actually come up with. What's up? What's down? So to start off with, what is up for this week? So what's up for this week for me are home builders. I have seen a great run in D.R. Horton, so I'm glad that I took Josh Brown's advice on that, watching that on CNBC a few weeks ago, and definitely forgot that I had bought that and it was sitting in my portfolio until about yesterday and realized I had a decent gain on it. As a prospective home buyer, though, the housing market is on fire, which is definitely weird to say in the current Corona times that we're living in. And just an odd experience, but the home builders are on fire. Housing's here in Austin is going and getting snapped up like that, along with other markets such as Salt Lake City, Pittsburgh, the West Coast. Everything is out in the suburbia lands are getting snapped up. So that's my what's up for the week. My what's down for the week are banks. It's not great when you have the Oracle of Omaha selling out over not only a quarter of Wells Fargo, but also 62% of JP Morgan Chase, which he sits on the board of, while also then investing even more money in your competitor, Bank of America. So banks are in a tough spot right now, and I'm going to have them be my down for the week. Justin, what about you?
Well, first off, what's down for me is something that just does not make sense to me at all. And we were discussing a little bit earlier is quarterly earnings, not learnings, earnings. Both Walmart and Home Depot killed it in their earnings call this morning, and both of them immediately went straight down. So that confuses me a little bit. I'm a little fresh and new with this market thing, so I guess I'll learn as we go. What's up for me though is online sports betting. Sports are back, baby. But a little bit more on that later. I'll throw it over to you, Ryan. What's up for you?
So for this week so far, what's up for me has been Peloton as well as JD. Peloton took kind of a breather the past couple weeks, falling from like 74 share to like 62. But today alone, they were up like 7%. I think their earnings are next week or the week after that. They seem to be on a hot streak going into earnings. And then JD seems to be getting some traction recently, the Chinese e-commerce, after Alibaba's had some threats from good old Donald recently, potentially wanted to ban them as well. So JD seems to be a winner in that space. What's down for me, Fastly, they're still struggling to, as they expose that their number one customer is TikTok. Until that deal is done with Microsoft or Oracle or whoever the heck's going to buy them, they continue to just be under pressure and stay around the $70 range, falling from like 120. So big loser for the week. Hopefully they can turn it around and become a winner.
All right, now that statistics lesson is over, Justin, why don't you want to kick off our first topic?
Well, Pate, I'm a little bit offended here. You failed to ignore the fact that we do have a segment that we did last week. It's Justin's question of the week.
Yeah, that was on purpose ignoring.
Oh, I know it was, and I'm gonna call your bluff there. I'm gonna keep doing it every single week until you cut me out. So for this week, we have. So let's say you're in a professional setting. Let's say your boss asked you to go play golf, probably in a little less uncertain times. And you got one choice. You can either hit piss missiles off the tee box, or you can get up and down consistently. You cannot have both. What are you picking?
And you're sure I can't have both?
I am 100% positive. You know, you don't have either right now.
What if both is reality, though?
Answer the question, Faye. Come on, man. Right, no, we know you don't have both.
I do have both. And the only smart answer to that question is you got to throw it back to the saying, drive for show, putt for dough. I'm sure one of y'all was wanting to say that saying for this, but you make your money and you take your friend's money, more importantly, by getting up and down and putting consistently.
Ryan, what you got, man?
Yeah, for me, I mean, getting up and down is a big struggle. I mean, I played with Pate a couple weeks ago. I did get up and down out of a bunker that was about maybe 20 yards away. So if I could do that more consistently, I would feel like a badass. So.
Well, yeah, if we all could, chip in from bunkers more consistently, I think we'd all be doing pretty well.
Well, as y'all both probably know, as you've seen, I suck on the golf course and rarely ever play, but trying to get more into it. If I had to choose, I'm going to go a little bit opposite y'all. I would want to hit absolute piss missiles off the tee box. I'm talking 320 every single time consistently. Short game sucks. That's fine. My boss sees that, going to be absolutely impressed. Going to go back to the office, talk about it for months on end, take me out as often as possible. Yeah, you're going to win some money getting up and down, but it's all about the show. I know y'all hate me.
Next segment.
Next segment. All right, getting to the real stuff here, guys. So like I said, want to come back to online sports betting. So as you know, sports are back, NBA playoffs, NHL playoffs, all that. So I know, Pate, you wrote an article on this already, and I know very well that it was very well received by the reader of that article, aka me. And but let's talk about it anyway. So currently there are 22 states and District of Columbia approved sports betting. About by the end of 2022, 34 states and will have some form of legalized sports betting, which accounts for about 57% of the population of the United States. Online casino styles betting is only legal in 6 states currently, which kind of sucks. I know y'all know, living in Texas, it's not even on the radar right now. We didn't even have it on any talks in the last. What am I trying to say, Pate?
So you're talking about that we don't have it on the ballot, which is very unfortunate. And it's unfortunate that our state legislature only meets biannually. So we have even less, we have to wait longer for initiatives to get on the ballot here.
Thank you.
And we're the second most populous state in the US. Not an ideal situation for getting it for our locale. But yeah, I think it's interesting how you're seeing it spread across more and more states because it is such a good source of, it helps both sides. Now, obviously, gambling is an addictive activity, but so is drinking alcohol. So it's kind of apples to oranges when you're doing that comparison. But the state can win and the consumer can win if it's done in moderation and it's not a detriment to the actual gambler or the consumer. So that's why I think it can be a good relationship, and it can drive significant tax revenues at the same time for the state. That's the main interest that they have. Get licensing permits for specific operators to be able to operate within the confines of the state, but then also taxing the revenues that come from that. And then we all know, because we have all been gambling for years, I would really prefer not to be using Eastern European websites anymore and trusting my debit card or credit card information to do so. I've had, I think, 2 fraudulent transactions on my cards throughout the years. And that's the only logical explanation of where they could have come from were those websites. So it would be really nice just from a more of a financial safety, but also a feeling of security from our side of knowing that my money is being kept in a U.S. entity that's subject to regulations and is less likely to get sold on the black market if there even is such a thing. Just sold as data and somebody trying to steal my identity. So that's kind of where I come down on it. Ryan, what do you think?
Yeah, I mean, it's definitely something that's going to come in the future as we just continue to expand technology around it. I mean, Barstool Sports is eventually going to come out with an app of some kind where you can place bets.
Or they come out with an app, I will say.
Yeah. So like Pin Gaming, they're launching their app in September for their online sports betting.
Yeah.
And yeah, I don't really understand how pizza reviews can relate to getting some traffic on your online sports betting, but I guess it works. I don't know.
I can. You put it in the same exact digital platform as you're watching pizza review videos, and you make it to where you can bet on the Calgary Flames that same night. You know, in
Are you saying Barstool has a good following? I don't know. I don't follow them. They're a
your
competitor, dude. So
only is amusing to you.
you can't
But-
support them.
But yeah, I mean, you're about to see the best test case of bringing a digital betting app directly to the most probably ravenous fan base and loyal fan you can imagine, that is full on into sports betting and full on into sports itself. So,
well, them and then MGM apparently spent about $1 billion to upgrade their online or digital marketplace. That's apparently worth about, I want to say like 700K, but they don't let their brick and mortars, their financials be public, but just their online is worth roughly $700,000. So they're getting involved too.
well, and IAC just took a 12% stake in MGM specifically to make a play on and get a share of online sports betting being rolled out and legalized across the U.S. over the next 5 to 10 years.
Yeah, that sent MGM up like 12% that day.
Yeah.
So look for more of that. I mean, for me, the minute I can access an app and gamble, I'm going to be doing it.
So are y'all on online sports betting right now? I know, Pete, you said you are, or you were at least.
Allegedly.
Allegedly. There you go.
I was in the past.
What happened there, Ryan?
Yeah, tell us a little bit about that, Ryan.
So as I referred to it as the roller coaster of 2018 summer. So I placed a $1,000 bet with part of my signing bonus on Bryce Harper to win the home run derby, which he did. And I won $3,000. So built that up to like 5,000. And then throughout the season, this was the year after the Astros won the World Series and were basically unbeatable against crappy teams.
Stop.
Because they hit trash cans. But anyways, yeah, so I would place bets on them to score the first run of the game, to score the second run of the game, anytime they're about to come to bat, like through the live sports betting. And built that up to like 12,000. But then the sad part of this is I placed 3 large bets that they would sweep the Rangers, just winning game 1, 2, and 3 in a weekend series, thinking that I was going to double my money. But little to know, they got freaking swept by the Rangers, who were absolutely terrible that year. So that just goes to show you that never think you're safe out there with sports betting. You're going to lose eventually. But
in hindsight, I should have been wearing my Rangers hat for this episode.
yeah, now I will always hate the Rangers because they took all my money. But since then, I have not placed a sports bet because I've been to the bottom.
Now you just bet with options contracts instead. It's not.
Yeah, much safer, much smarter. Yeah, we'll get to that a little bit later too. All right. One other thing to mention here. There are two major SPACs, or one that's already gone through. Rush Street Interactive went public through SPAC very recently. And then Golden Nugget, their digital gambling is right behind them, probably around Q4. So December 31st is their deadline currently, unless they extended it all. And that's just their digital part. They're obviously still going to have their brick and mortars. And right now, if you're looking for that, Golden Nugget is under Lincadia Holdings for now until they merge. So not just big names like Penn and MGM. There's some other ones too coming down the pipe. I'm sure they're even smaller than Golden Nugget and Rush Interactive.
Yeah, and
everyone wants a piece.
It's reasonable to expect you're going to see even more offerings come out from the bigger names like Las Vegas Sands and Caesars are not going to sit. These are casino companies.
Yeah.
They will find a way to get their cut. The house always wins.
Exactly.
So they will. Yeah. You expect incredible competition in this space, but I think the total addressable market, the pie is large enough to welcome a lot of players in it. It'll come down to differentiation. I think once you have a more saturated market of who's winning in the marketplace, because right now you have such a limited number of players in the US and limited localities, but that's legal. But once that expanded, we know the demand's there. It's all going to come down to who has the best product at that point.
Yeah, I will say, like, whenever I was using Bovada, you basically, when you would cash out, you would get a DHL shipment, and you would have to sign for it each time that check would come in. And, like, who has time to do that during the day?
Yeah, I have yet to cash out, so I'm worried about that one. I'm about even on 3 years worth of gambling, so I don't do anything to move the needle though.
If there was a convenient way to, like, actually cash out and just have it go straight into your Venmo account or something.
Well, I think that's where the establishing more U.S. entities comes into play. You know, we don't have to wait from, like you said, a check from the Deutschland to come in and sign for it, and then wait another 3 to 5 business days for your bank to make sure that's not a fraud.
Yeah, mine's allegedly in Argentina, so I'm not too confident in that one. Anyway, I guess that's enough about that, guys. Let's move on to the next topic. Pate, I think this one's yours. So talking about the divergence of popular brands in our age demographic and what are they actually worth on the open market. Please explain this to me like I'm a freaking child.
Okay, well, you are, so this should be easy. Yeah. Insert Michael Scott explain it to me like I'm 5 gif here. But what I wanted to talk about, was kind of just the most popular brands that we've seen of not only people our age, but, Ryan, you and I have younger siblings. Justin, you have older siblings. Just also the brands that are on the fringe of older millennials and Gen Zers, and then we are kind of stuck in the middle between the two. So I just wanted to talk about brands such as Patagonia, where it's this huge widespread brand, and then yet you realize that it doesn't have nearly the amount of sales that a Nike does. And I just think it's really, it's always interesting to see when you go and are researching brands like that. Lululemon, I know Nike are 3 apparel companies that are very popular, but you also look at a brand like Apple is extremely popular and worth nearly $2 trillion nowadays, at least on paper. So, I mean, what are some brands that just stick out to y'all that are in everyday life, but you think are worth more than people realize, or maybe worth not as much as people realize?
Go ahead, Ryan.
Okay, I'd say Microsoft is one. I mean, anytime you open your computer, they're in some way involved, either through Teams or like Excel. I mean, everybody has to use that product. It's something that everyone's going to think like, hey, this is a huge company that has multiple different revenue streams. And like
a lot of people know Microsoft is big.
But just going back to
undervalued.
I mean, look at what Bill Gates built from where he started. That's just one that comes to my mind. It's like a good example of kind of starting off in the background, but now everybody knows who they are, and they'll continue to be successful.
Yeah, and kind of in that same vein, I think Adobe is hella undervalued. I think they're going to be implemented into a lot of things we do, just kind of like how DocuSign emerged pretty heavily. Adobe has the infrastructure already to do stuff like that across the board and take a really just stranglehold on the market. I think a lot of schools are using this, especially if we're going, teleworking and telecommuting and teleschooling, all that stuff. Anything virtual, they're gonna have some stuff in place that's gonna be used across the board.
Yeah, another one I think is Yeti. I mean, look at
we know how you feel about Yeti. Yeah,
literally one of my favorite companies ever in brands. I mean, I think that they're just going to continue to grow and take over the outdoor space as far as coolers, cups, clothing.
Dude, they're cutting edge. Yeah, all the time. Like their new stuff, their product development is awesome. There's some stuff we haven't even seen yet. They have in the mix. Like it's pretty cool. I saw their chairs before they got released, and like I was like, I need this.
It's like $400, but like
I need this. I can't afford it. I need
people
this.
buy it though. Like
Yeti, drop the bag.
I don't think anything on Yeti is sold for under $400, no matter what it is. But see, Yeti was actually one that I would consider to be less. I'm surprised it's as like a high of a. I know it's talking about stock, but it's valued as much as it is, mainly because it has insane competition. I understand people buy it for.
Yeah, I'm surprised
because that's my background is marketing, so I understand that point of it. But I can also understand when something costs 20% less, and it's no discernible difference. Of granted, this is talking about the original tumblers and those types of products, but another one I wanted to point out is going tying back into sports betting is I don't think people realize. I think people know how much money is involved in the NFL, but it also is one of the most recognizable entities in the entire world. And I think that it still has so much room, as hard as it is to believe, grow not only internationally. I understand the hurdles that go into that, of it not being as popular of a game internationally, but in terms of just viewership and expanding franchise and brand value, I think the NFL is one that everyone just kind of take for granted. We've seen that with COVID, and it potentially shutting down. It took that for us to realize, like, oh, we might not have an NFL football season, and then it just we still consume that product. At least us three, I know, consume that product pretty heavily. I'll be watching Hard Knocks later tonight, so and then we'll do nothing. They will have COVID tests and walk through practices, and Sean McVay taking his shirt off again unnecessarily. So,
and unnecessary drama. Dude, Pate, I'm on the other side of you, man. If we're talking about our generation, I think the NFL might take a hit, especially with the concussion stuff coming out. I really think people are shifting to other sports more heavily and getting more interest in that, and NFL's taken a little bit of a hit. I mean, they're always going to have some kind of control. Like they are the best when it comes to their marketing and all that stuff. Like it's great, but I think for our generation, we're not going to have a lot of our kids playing football growing up, and like that's going to affect it. It may not be our generation, but it might take another generation to come in and damage it substantially. But I think we're headed in that direction. I don't want to see that, but I think that's the reality, especially with Gen Z.
I think at some point you're going to find an equilibrium of everyone knows the dangers of football by this point, and what it is to play it. It's still such an out, though, for people in not awesome situations, that especially incredibly athletic people. And if the money stays good, you're still going to see people play it no matter what.
That's the thing, though. The money isn't that great compared to other sports.
Yeah, but it's cheaper to play football than it is to learn golf or baseball and play those sports. So.
And basketball is such a small population that it's hard to break that surface.
The biggest growth, that in soccer, I do.
Especially their international play, because I mean that gets more people involved. There's so much talent across the board, even at the developmental leagues and international leagues in China and Europe and all that. So yeah, I think you're right.
Yeah, another one completely different is Spotify. Spotify, I think it's hard to believe that it still has so much more room to grow, especially globally, that I think it's north of 150 million subscribers by now, and it's outpacing Apple. It's not outpacing, it's keeping pace with Apple Music's growth, and it has a higher NPS score. People like it better is what that translates to in normal people terms. But it's all over the place on people's phones, and then I still feel like people don't realize the value. It hadn't realized its value yet, and reached its potential.
Dude, I didn't even think about that. That's one of the biggest things for our generation. I mean, I talk to my parents, or even like my older brother and sister, like they don't realize the value that Spotify has for its users. But everyone is in our age or younger, that's what they use. At least all my friends do. Anyone I've ever talked to, if they know what they're doing on a computer or know what they're doing with their music, they definitely use Spotify and use it to its full potential. for
Yeah.
podcasts, playlists, sharing, everything. I think the only reason people use Apple Music is because it's the same thing with like Safari. It's the thing that's, on your phone when you get it, you have to download Spotify, you have to download Chrome, but they're far superior to anything you're going to get when you first get your device.
Yeah, and that goes into the not so small company Ryan mentioned of why Microsoft ended up with an antitrust suit back in the late 90s is they're owning the rails, Apple owns the rails, and then they charge people to use those rails. And that's just the way it is. But yeah, Spotify. And then I think us three have a unique perspective too of us and people slightly older than us, we're some of the last people that used and remember like burning CDs and paying $1.99 for songs.
Yeah.
Look how far we've come in just a short period.
And then LimeWire.
And then
if you didn't have a virus on your computer by age 13, then you weren't doing things right.
I still remember having to go to Starbucks down the street to burn CDs, and then eventually learn how to.
Yeah.
I don't remember. I had to learn how or get the right computer to do so, and then also just buying a stack of blank CDs.
Yes, and then waiting 3 hours for it to get downloaded on there and naming it yourself. All that stuff, dude. All these apps. I mean, not even just Spotify, but I think we all see the extreme value in it.
Ryan, what about you? Do you have any others?
Yeah, I mean, I like the Spotify one. That's a good one with Joe Rogan going over there.
Coming to Austin, baby.
Yeah, he's going to Austin, and I think more are going to follow him there. Apparently, Austin's going to become like a huge comedy hub now because of that. Because he's just going to bring all of his friends there, and they're going to want to perform when they're doing his podcast. So
it was already up and coming, yeah, but it's going to take off.
It's pretty cool. That's a really good example. I mean, I like the Yeti example just because, like, when you think of quality,
we need to widen your horizons. We're not talking about
Ryan. Is Yeti paying you, man? Like, do you have some inside track that you're not going to tell us? I mean, don't tell us on screen. Tell us off screen because
let's get a sponsor. Let's do it. I mean,
dude, drop the bag, Yeti. Yes, I want that right now.
Let's go. I'll keep name dropping them all day for that.
All right.
Oh man.
All right. Let's move on to your segment, Ryan.
Yeah, so I'm excited about this one. Between this and your sports betting segment there, Ryan, I think we're recording this for a reason, just so we can show to your wife that you actually do know what you're talking about and you're self-aware. So let's talk about trading blunders to avoid for day traders.
Yeah, so I've learned the hard way on this one, but also I've also built up from a very small number to a very large number.
Yes, you have.
Just some.
You can also say you're not a CFA or CFP.
Yes, and I'm not making decisions based on like true deep diving research. It's all Robinhood trends and
don't mention.
Let's just say Ryan has the gift, and we have yet to tap into exactly why, and that's part of the reason why at least I joined this podcast to figure out and pick his brain on what he's actually doing.
Yeah, so but these are
Take it away,
today about some things to avoid for people that are new to the space. Rolling the dice with one stock. So if you like put all your eggs in one basket and say, hey, I think that, let's say Microsoft is going to buy TikTok tomorrow and it's going to drive them up 20% or something crazy just on the news. And then you buy a call or a put based on that. Say you buy a call for a week out, thinking that it's going to jump really quick and you can turn a quick profit. That's going to come back to bite you because you're just taking a gamble on one stock. You need to really think about spreading it around to multiple options, and also trying to cover that option with a put and look at some spreads as well. It's always hard to me to not do unprotected calls, which is I've learned very smart, because if you do just throw it out there and say, hey, in 2 weeks it's going to reach $10 more than it is now, and then it goes the other way, then your option's worthless.
I'm trying to save you from your Astros betting self.
Yes. I don't want that to happen again.
Like, yes, you can make some lucrative cash in a short amount of time, but you can also lose it very, very quickly. Let's say your CEO tweets out something stupid or racist. It's all over. It's done.
Exactly. There's just too many things with putting it all in one stock. Too many things that can happen. Definitely want to spread it around to at least 5 to 10, at least 5, so that you can cover it with maybe one of the stocks goes up really high. You don't have to worry about it. And then also something to avoid is placing short dated calls. I don't recommend that at all. You want to give your stock some time to grow, so give at least 3 weeks. That's what I like to do, because then you can, like say that it's $12 a share and you're buying a call for $15 a share. You need to give it 3 weeks to maybe go to 20, and then your option is going to be worth 2 to 3 times what you purchased it at. So let your stock do the work for you. Don't be stressed out each day. But at the same time, if you are able to lock in a gain within a couple days, then don't feel like you have to hold it. Take those gains, because
ring the register.
Yes, ring the damn register, because before you know it, it's going to go away. But giving yourself some time will just help you not be as stressed and kind of ride the roller coaster and not have to stress about it. But once you're up big, get out for sure.
Definitely have an exit strategy. I think even if it keeps going up after you get out, be happy with your gains, or be satisfied with your minimal losses. If you do end up taking losses, hopefully not, but it is the reality of it.
You should never enter into any trade or investment without knowing how you're going to get out of it. And that is not only talking about the stock market, that is talking about anything from home buying to renting a property. You always have to know how you're going to get out of it before you get into it, because if you don't, you can either find yourself stuck with it, or you're not going to know. You're going to let emotion get involved at the moment of decision, and the angel on your shoulder will say it's going to keep going up. It's going to keep going up. And then when it's going down, the devil on your shoulder is going to say, no, it won't go down any further. So you always have to know, you have to have your own risk tolerance. You have to know how you're going to get out before you get in.
And absolutely don't fall in love with one stock. Try to mix it up some, because that stock's not going to be your friend forever.
Warren Buffett says the stock will never love you back as much as you love it.
That is very true. Very true. And then, another thing I would say is be wary of placing bets right before earnings. Like what we were talking about earlier, today Home Depot crushed earnings. I mean, from all numbers, they beat top, bottom line, and their stock was just flat, went down like 1%. I mean, I was thinking that thing was going to jump like 10%. I was going to make a huge gain, but instead I lost a couple $100. And
you'll be okay in the long run for that one. But yes, it is really weird.
Yeah, it's strange. But I bought a call for mid-September, and we're sitting here mid-August, so I still have time for it to run. But yeah, if you would have placed a call for this Friday, assuming it was going to go up, you would be screwed. So that's just another example of something to avoid, and kind of strategically placing those calls. And because day trading can be fun, but it can also be your worst enemy.
And if you are doing calls too, look up protected calls, protected puts. Go research that a little bit and get yourself familiar with it. I suggest doing some practice ones where you're not actually putting money into it, but follow it and make a spreadsheet, and say, this is what I would have done realistically. What would actually happen 3 weeks from now, and just track it and be like, okay, well, this I'm okay with this loss. I'm okay with this gain. And have some background and reasoning behind your calls and puts and bets and everything like that. I try to steer clear. I don't have enough capital to do too many puts or calls, so I try to steer clear of that. But if I do, I make sure to do research well ahead of time and know what I'm doing. I think y'all do the same, luckily. Well,
Yeah.
maybe not Ryan, but he will now.
Not Ryan as much. I almost always have a thesis for why I'm purchasing something, whether it be an option or whether it be an actual stock. And some of that thesis could be earnings, like Ryan just mentioned. The reason why stocks are always a lot more volatile, especially right now around earnings, is because that's when their implied volatility is the highest. But after once the information is public, their implied volatility goes way, way down, usually, because investors know exactly how the company did that quarter. So
yep.
That's why you see stocks behave that way of, especially when you're trading options, that their premiums could be higher before earnings, and then afterwards they're not going to be nearly as high because that implied volatility is gone. Yeah. And Justin, like I said, I always have a reasoning. Some can be chart based and technical analysis based. Some can be more macroeconomic based, and some work and some don't. That's
always remember we are not experts, and even the experts miss a lot of times. Like no one knows sometimes. I mean, it's hard to predict. But be confident in what you choose.
Yep, that's just another reason to take a 10% gain if you can. I mean, that's still for some people a great year. Like that beats the S&P. Just take 10%, to maybe 20, but don't get greedy and try and run it up to like 100, 200%. I mean,
yeah, don't go for the big fish all the time. You can. Everyone's got their big fish story, which is just a metaphor for I've had this stock, go up 800%, but that's not a strategy. That's an anomaly.
Yep.
So always have that in the back of your mind. Have an actual plan in place. Look at us professing advice that we need to do better at following ourselves.
Now we just need to play this back to each of us like once a week or so. All right, guys, that's all I got for today. I'm gonna go fish a little bit.
I was gonna ask first. So what? The Rockets are losing this series, right, to the Thunder?
Ryan, give us a score check here.
I think Westbrook might be out the whole series. I just got something on my phone. Let's see.
Be a real shame. Darn.
Shoot.
No, they'll win this series, but they'll lose the next one probably.
You want to bet on that?
Yeah, everybody.
Circumvent the package coming in.
You think OKC is gonna win?
I don't know. Depends what you're willing to bet.
I don't know. Harden's shooting a tech right now. And on that, everybody, thanks for watching. I know you don't want to hear us babble on the Rockets anymore. We'll see y'all next time.
Bye, guys.